This is Eric Brotman, the host of Don't Retire, Graduate, the podcast that asks you what you want to be when you grow up so you can graduate into retirement with a purpose and a passion. Welcome to our Diary of a Financial Advisor segment, where we interview financial advisors about their professional journeys and their passion for helping others succeed. Today, I'm pleased to be joined by BFG's own Dan Halla. Dan has been with the firm how many years now? 8?
6 years.
6. Feels like 20.
It does.
6 years. And he is a specialist in long-term care. He knows the insurance business and risk management better than anyone here. And Dan, why don't you first introduce yourself and share a little bit about how you wound up at BFG and how you wound up doing this for a living?
Great. So good morning. My name is Dan. As Eric alluded, I am part of the BFG financial advising team. I work with all of our team's clients. Don't have any specific of my own, but I do get to work with all of the families, which I really enjoy. I specialize in long-term care here for our clients. It's near and dear to me. Personal family stories as well has helped me kind of hone in on this. And I started at BFG 6 years ago, a recent graduate from Stevenson University at the time. And I met Eric at a scholarship luncheon where I had a speaking role, and the rest is history.
Yeah, having been involved with Stevenson now for many, many years, we've hired a couple of the student speakers at those events because I figure if the school has picked you to represent, then there's something special about you already. And when you said what you wanted to explore doing for a living, it sort of paved the way. Now, most people who think about long-term care are not your age. Let's call it what it is. Some people don't think about it at all, but when they do, it's because they're starting to worry about it for themselves, or it's because they've seen their parents there. And so your personal story involves a generation prior to that, yes?
Yes.
Would you share your story with our audience?
Sure. So the story of mine is related to my grandmother on my dad's side. Local to Maryland. She had lived by herself for a number of years, pretty much my whole life. And seeing her go through the progression or digression of the stages of life, it worked out that as I was learning more about the financial planning industry and about long-term care, she needed those types of services. So that pushed me to learn a lot more about this field. And it really helped myself and my family go through a very tragic time.
So naturally, you go through something personal and it becomes a calling or a passion for you. And you've shared that story not only publicly like this, but also with clients and other members of the firm. Long-term care is something people don't want to think about. None of us want to see ourselves in a position where we can't take care of ourselves. Especially us guys, let's call it what it is. We think we're Supermen. No, that's not going to happen to us. Mm-hmm. And, as we get to a certain age, and I think it's around 45, you start having these conversations, plus or minus?
Plus or minus, yes.
So my wife and I did put some long-term care in place when I was in my mid to late 40s. It's no fun. It's a check I despise writing every year. I'm not going to lie. It's no fun. The things you want to spend money on are things that are enjoyable, or things that bring something to your life, or things that you expect to grow. Like, investing is more fun than buying insurance.
Absolutely.
It is what it is. So in some ways, being the risk manager for our firm and being involved with particularly this aspect, whether it's disability or long-term care, you're talking to people and encouraging them to do something they don't want to do. That's the hardest job there is in the financial world that I can come up with. So you didn't choose an easy assignment. How did you decide that this? I know you mentioned your personal story, but it's more than just that, because it's more than just long-term care. How did you decide that you were going to take insurance and make it your own, and that you were going to own that space?
That's a great question. It would be more the personal relationship to our clients. I never really had a focus or a desire to be the investment guy, to say, here are the alphas, or here are the betas, or here's what it's going to grow to if you look at these projections. I like getting personal with our clients, understanding their families, why they're making the decisions that they're making, and how to maybe help them make a better decision for not only themselves, maybe it's their kids, maybe it's their parents, or maybe it's their friends that they're relying on for advice.
So the industry's changed a lot, even in the short time you've been here. And having been at this more than 30 years, it's changed a whole lot for me. And one of the things that's changed is a lot of insurance companies has sort of had their teeth knocked down their throat on long-term care and decided they're not doing it anymore. So there are fewer and fewer players in that space. And the available policies and contracts have changed a lot over the years. Can you talk a little bit about not only how that's changed in your time here, but what you see? Read the tea leaves for us. What's coming down the pike, Dan?
If I could predict the future, I would probably be doing something different. I might be investing a little bit more or making other decisions. But you're correct. When long-term care started, there were a number of companies, and it was traditional long-term care. It was like auto insurance. You use it or you lose it. Then there was the pricing aspect of it, where really how much do you charge for these types of policies? And that's what traditional long-term care was. It's a type of insurance policy. And even sometimes they were available through employer benefits. You don't see that much nowadays. A lot of the transition has happened from traditional policies, where it was a use it or lose it, to hybrid, which offered some sort of reimbursement, whether it was in the form of a death benefit or a cash value, since it's based on a different product, which is a permanent life insurance policy. And that spoke to the changing desires of clients and the general public. They no longer wanted to pay for something that they could never get back. So the transition has definitely happened to the hybrid policies.
You see that continuing?
I do.
There's nothing worse than the conversation of paying for something you don't see yourself ever using, don't see yourself ever needing, never want to use. Like, and it's like the auto insurance. I tell people, you're not buying this hoping to have a crash. You can try it out. You're buying it in case something goes wrong. But it's not fun.
You never have to use it.
And yet you never use it. Right. But there's more to the risk management piece than just the long-term care space. You've had a chance to work with lots of folks, and I believe you've paid some meaningful claims. You've paid claims on life insurance. You've paid claims on disability, on long-term care, on other things. Some people say when they're in the insurance business that when they actually deliver claims, it's a bittersweet thing, because on the one hand, it usually stems from something tragic or unfortunate. But on the other hand, you're sort of the white horse that comes in with help where it's needed. You're the cavalry. Has that been your experience so far?
For the most part, yes. You can do, in my position, you can do as much as you possibly can. You can build the relationship with the clients. You can assure them that you're always here for them, which is true. And that's something I pride myself on. We have 600-700 households that we deal with, and I'm here for all of them. Something that you might not get as personal of a relationship with outside of our firm. I know there are others, but typically in the industry, it's here's your policy and we'll see you in a couple of years. But when it comes time for a claim, you not only are assisting the client in the time of most need, but you're also dealing with insurance companies, which is impossible. No insurance company wants to pay a claim, and you have to be there to fight for the client in order to get the funds to them to get the closure that they need.
I think people have a general distrust of lots of things in the financial world. There's a distrust of Wall Street. There's a distrust of insurance companies. There's a distrust of banks. It is an issue, and I assume that's come from all the horror stories that have come where an institution has done the wrong thing by somebody, and people talk about it. It's kind of like being afraid of the airlines because a plane crashes every so often. You never hear about the plane that landed safely. You only hear about the one that went wrong. And so when there's a disputed claim or some really just awful case where you hear the worst, that an insurance company has just either behaved in a way you wouldn't expect, or there was some clause on page 78 of a contract and there was, litigation, or all the horrible things you hear about sometimes. Those are the stories you hear. It's so rare that you get an opportunity to hear how this kept a family in their home, or allowed grandma to age with dignity, or allowed allowed one of the spouses not to become a single working parent because of a death claim or something like that. So, what do you love the most about what you're doing? What is it, in a perfect day? What is the highlight where you go home and you tell your bride, man, something good happened today? What does that look like?
I would say it's receiving emails or phone calls from clients, whether it's myself or other teammates, team members, that, any client we work with or that I have conversation with has the utmost confidence and trust in what I do and what our team does. That gives me the warm feeling inside.
So I would normally put you on the spot here and ask if you've already done your own long-term care planning, but based on your age, I suspect that's probably not time for that. You've got other fish to fry first. Mm-hmm. But I am going to ask you the question that I ask everybody who comes on Don't Retire, Graduate, or on Diary of a Financial Advisor. Dan, we all want to know, what do you want to be when you grow up?
I would love to be you, Eric. No, it's all
right. That was a cheap shot, but all right. I appreciate that. What would you really like to be when you grow up?
I think I'm still trying to figure that out. I'm in the earlier years of my career. I know that my wife and I we're starting this journey where we're building our lives together, and ultimately, I want to be the best dad that I can be mm-hmm. when that time comes, mm-hmm. And I want to be the best professional in whatever field, whether that remains insurance or whether that transitions to more financial advising. I really want to own whatever path I end up going down. So it's the determination and it's the confidence that is instilled in me from my teammates here, but also my wife.
Well, I'm not a betting man because I'm in the financial world and we shouldn't gamble, but my money's on you, Dan. That's good stuff. Thank you for joining us on the show. Thank you for being forthright and sharing your story. And thanks for all you do every day to make this not only a great place to work, but a place where clients can have some confidence in what's going on.
It's a pleasure.
Well done. I'd like to thank all of you for listening and watching today. If you enjoy our show, please subscribe, leave a rating on your favorite podcast platform, and share it with your friends and family so they can join you on your journey to financial freedom. If you'd like to send us a topic or idea we may discuss in a future episode of Don't Retire, Graduate, please post it on our Facebook page or tweet us at Brotman Planning. We'll be back next week with another engaging guest, and in 2 weeks with another entry in our Diary of a Financial Advisor. For now, this is your host, Eric Brotman, reminding you, don't retire, graduate.
Securities offered through Kestra Investment Services, LLC, Kestra IS, member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC, Kestra AS, an affiliate of Kestra IS. Kestra IS or Kestra AS are not affiliated with Brotman Financial or any other entity discussed.